All right. Thank you for joining today. I'm going to talk to you about the work opportunity credit, and with a caveat, as we know it. So please seek your own advice, do your own research. This is basically what we've come up with, Team Theman, and I do know it's something that I think that we have been missing. I know we've been missing, and I wish that we would have gotten on this many years ago, because I know we personally have left money on the table. So we want to share with you what we do know. So first of all, what is it? Robert, next slide. All right. So what is it? Basically, it's just a federal tax credit for employers, and it is available for when you hire somebody in a targeted group. So here in a little bit, we're going to talk about who those targeted groups are. All right. So we wanted to share with you, like, how much is the credit? So the credit can be up, it's basically 40% for the first year that you have them, if you work them more than 400 hours in year one. So that's pretty much, we were thinking tax season, that's an average of 26 hours per week. And that's just if you have them during tax season. So obviously, if you have them longer than tax season, then you should be able to hit that 400 hours. If you don't hit the 400 hours, you have to have them hired at least 120 hours, and then you'll get 25% credit. And so then as far as the amount of wages, it depends on the target group. Again, we're going to kind of drill down to who these groups are, but the majority of the ones that we have that we're seeing, they're going to be limited to the $6,000 in wages per employee. So essentially, if you've got someone that made at least $6,000 at the 40%, then we're looking at a $2,400 credit if they're in that 400 plus hour range. And we'll show you the form here in a moment. Maybe it'll make sense. But let's see, I lost my PowerPoint.
So if I add this to the cart, do I have to create a customer to be able to do this? So can I just use you? Yeah. That one that you
do y'all see the PowerPoint? I lost it.
My internet just totally decided it was done.
Okay.
There we go.
Great. All right. So essentially, you could get $2,400, but up to $9,600. The $9,600 is more for if your limit is at the $24,000 limit, which is typically going to be your veterans that fall under certain categories. So I'm going to try and go to that maybe a little bit later in the presentation, but for the most of the ones that we qualify for us anyway, is in the $6,000 limit range. So Robert, go ahead to the next slide for me. So basically, the qualified wages, again, they have to work at least 120 hours. They could not have worked for you previously, and they cannot be a dependent or related to you. So we're going to show you the form 5884, this is the form that you'll use when you actually do your tax return. I'm not going to get into depth on the actual tax return piece. I thought we could maybe do another segment, maybe in the summer or after tax season, on how to do this for the tax return. So just wanted to kind of show you it, just so you can kind of get the idea of the theory behind it. But as you can see on 1A, this is for the person that is at the 25%. So let's say you've got 6 employees that fall under in the targeted group, and they worked at least 120 hours, but less than 400. Then you would, and again, if it's the $6,000 per person, so let's say they made $7,000 each, then you would put 6,000 times those 6 people, and you would put that dollar amount there and multiply it times 25%. And again, where I got that $6,000, we're going to go over how we came up with that. But then you could have somebody that worked more than 400 hours. So let's say you had one person that worked over 400 hours. So you take $6,000 times 40%, and then you've got the $2,500 credit. So this does flow through to the K1 for any entities, and then it obviously is a credit, it's a flow through to the K1. Robert, did you want to add to that, since I know you actually did a tax return, a mock tax return on what this looked like? Do you have anything to add to that?
Yeah, I think the only thing I would say is any credit you ever, you get, you have to go ahead and make an adjustment to your deduction for salaries and wages. That could be something very easily missed. I don't know if Blockworks
Employee
does that
retention
automatic.
employee retention credit is one of them. I did read that. So if you got an
Yeah,
employee
so-
retention credit for that. Mhm.
Right. So you just want to go in and make sure you're not double dipping, essentially, because you can't take a deduction and get a credit on the same dollar. So I think that's just, I mean, a lot of us as tax professionals know that, but that's just something to note. I don't know if Blockworks does that for us.
Okay. So now you're probably asking, how do I get this credit? All right. So we'll tell you how. So basically you have to fill out 2 forms. The first one is the 8850. And actually the prospective employee or new hire needs to fill this out. So here's how we do it. We have added this into our new hire packet. So whenever we do orientation with our folks, this is part of their new hire packet, along with the W-4, the I-9 and all that stuff. So we put it there with that. We've asked them to not date the 8850 just yet, because we had some that we hired back in November, but they didn't start, their start date may have not been till January 1st or what have you. And Rowena, who's our right hand, our district operations coordinator, has a contact of someone in a big organization that does these 8850s all the time. And correct me if I'm wrong, Rowena, but they date the 8850 on their very first day they start. So their start date. So if they were hired in in November, but didn't start till January, we're going to put that January date. And the reason for that, we're going to get to that, but you have a deadline. You have a very short window of getting this information to the state. So it's very important that date be really just when they start. So Rowena, am I correct on my understanding there?
Yes, that's what they were doing.
Okay, that's what that organization was doing. But I will tell you what the IRS basically says. They are saying that basically this form needs to be completed before you actually officially hire them. So that's why we are putting it in, well, we put it in our orientation packet, but anyway, I'm just telling you what the IRS regs say, that basically you have to have this form filled out before you actually officially hire them. So the other thing that has to be completed is the employer we complete the 9061. And what that is it's just attesting that basically that they do qualify, that they are in the targeted group. And we have been requesting this documentation. So for example, one of the targeted groups is SNAP, food stamps. And so basically they provide us with that documentation. We keep it, it doesn't go to the IRS. It doesn't go to the state. It just stays with our documentation. So we are signing off that it is, that we believe that they qualify. So the employer has to sign the 8850 and the 9061. And then the prospective employee only has to sign the 8850. All right. And Rowena is the expert here. So, I mean, she's done more research than we have. So Rowena, feel free to correct me or add if there's anything that I've missed. All right. So here is the form 8850, again, that we put with our orientation packet. And as you can see, when you're looking at it, I know it's kind of a small print, but essentially, as you can see, they have to check one of these boxes. And it's, check here if any of these statements apply. I'm a member of a family that received assistance, the TANF, temporary assistance, or I'm a veteran, and then it's got, all these different things for veterans, not just any veteran. So they have to be like part of, it's not just that they're a veteran. So basically you just have to read through these and see if they qualify. If they got SNAP or SSI. So the majority of ones that we have are basically that they have SNAP, which is food stamps, and or SSI. So those are the main ones for that we are seeing. All right, so let's go ahead and proceed from here. This is the form, the Department of Labor form 9061 that has to be completed by you, the employer. And this again is basically the same questions that is on their form, but you're basically showing that you saw the documentation and that you believe that they are eligible for the targeted group, and then you have to sign it. And it's a 2-page form, but we just showed the first page. All right, so let's go ahead and go to the next page. All right, so you have to submit the form, both the 8850 and the 9061 to the state workforce agency, which is SWA. So do not put these forms with your tax return. And again, you have a deadline. So you only have 28 days. And I have an asterisk there because there's always an exception to a rule, but it doesn't appear that the exception is anything that we would qualify for, but I just put an asterisk there. So if you did miss the date, then you can look at it and see if you qualify, but most likely not. Basically it's 28 days. The IRS code does say 28 days from the day when they started working. So that's why we're taking the 8850 and making sure that we only put the date of when they started working is how we are interpreting that. So we have to get that to the state pretty quickly. All right. All right, so again, to get the credit, you have to get the certification. So to get the certification, you have to submit the form to the state, and then the state will send you a form, a 9063, and it's basically your certification. And that's how you know that you get to use that person, their wages for the credit. Unfortunately, current employees, even if they are in these targeted groups, generally do not qualify. So let's talk about I keep talking about targeted groups. So let's talk about what those are. And essentially, I'm sorry, do you hear a lot of background noise on is it picking up the background noise here? Okay, good. Who is in this targeted group? So the IRS lists out several different targeted groups, but I'm going to say that there are specifics under each category. So you can see them here on the screen. I don't need to read them all, but again, you know, the ones that we're seeing are the SSI or the SNAP are the two that we're seeing a lot of, but there are these other ones. Now, again, under qualified veteran, let me see if I've got that. You know what we'll do at the end? I'm going to pull up, I have a link that will help. So I can show you it, and it's embedded in this PowerPoint so you guys can see it as well. So that you can kind of expand that so that you can understand, you know, okay, I have a veteran, do they qualify or do they not qualify? So we'll dive deeper in that, I think, later, because I've got the link for that. All right, so let's go ahead and go to the next slide. And again, once you get the certification, you get to take the tax credit. It is available right now through December 31st of 2025. All right. So let's talk about the submitting of this 8850. Again, I think we talked about the 28 days. And you're probably wondering, well, how do I send it? So there is a link for each state is going to be different, essentially. So we provided this link here so you can determine how you need to submit it. If you have offices or employees in more than one state, you are to send it to the state where they work, not where our understanding is not based on the corporation, where your corporation is, it's based on where they work. So if you've got more than one state, then would submit it to those respective states. All right, record keeping. And I think we kind of already mentioned this, but basically you keep the 8850, you keep the 9061. Obviously you're going to send those to the state, but the information that backs it up, like the SNAP paperwork or the the SSI paperwork, you do not need to send that to the state. That is for your record keeping if ever asked. And I think Rowena had mentioned that her contact, that the state has never come back and requested any of this information, and that so far they've accepted all of the applicants that they have submitted. Is that correct, Rowena?
Yes, she said they've never had any denied.
That's really good news. I like to hear that. All right. I think I got a couple more slides here. So if you're wondering, well, how can I find people in these targeted groups? There is a website that you can go to, the American Job Centers, and it also has some partnering agencies. So if you're trying to find some candidates in your area, it might be too late for this year, but at least for next year, well, maybe not. You have 12 months, right? You might need some people in the summer or what have you. I know we're always looking for additional CSPs. We seem to always be losing them. But anyway, so here's a way that if you are wanting to find some, and a lot of times these people are already pre-certified. So my understanding is that you may not have to fill out as much paperwork, because I think if they're already certified, all you need is that certification for you to get the credit. So, all right, let's go to this. This is our final slide, and these are the resources we used. But when you click on the first one, there, this is a great, can you click on that? Are you able to open it up, Robert? Will it let you? Okay. I was hoping that it was a hyperlink that when we share this PowerPoint out, that everyone would be able to get to it. So this was a great resource that Rowena located for us. And so when you click on that targeted group link right there, and it's also on the IRS website, but here's what I wanted to show you. Let's open up the qualified veteran. So I don't know if you can see that or if you can make it bigger, but basically, I mean, there's 4 or 5 different things that would qualify them. So they just can't be just you know, them being a veteran is not what makes them qualified. Oh, we lost it. There we are. So as you can see
Sorry
here,
about that. Sorry.
oh, that's okay. They either need to be receiving SNAP for at least 3 months, be unemployed for a period totaling of at least 4 weeks. I mean, so there's all sorts of, you know, different things here. Obviously not something that, you know off the top of your head. So that's why when they originally fill out the 8850, they might say, yeah, I think I qualify. But then when you get down to where you have to attest and fill out the 9061, you're going to have to dive deeper into whichever category they choose to make sure they qualify. We had one, go to the one that's down below for SNAP, Robert. She did have SNAP. And Rowena, maybe you could add some color to this, but she ended up not qualifying because of the time frame. Is that correct? I can't remember.
It was my understanding she did, but.
Oh, okay. It may have been some, okay. All right. Then never mind. So you were able to make sure. Yeah. So she did qualify, but if they didn't have it for the previous 6 months, or at least 3 of the previous 5 months. So again, there's like little rules under each one for you to determine if they qualify or not. So that is our presentation today. And I'm glad that we have some people that were able to join, and would love any questions that you guys might have or comments of what.
Christy, yeah, a couple questions for sure. Did you say earlier that the rate that you get is dependent upon their classification? Will I get more for a veteran and less for that?
Yes.
How do I determine what rate based upon that qualification?
Okay, great question. Robert, take me down to that link. Go down to that very bottom link that we were just on, and the top one. Yeah. And they have a really, okay. Where was that at, Rowena? I think I had, let's see, go down. I may have seen it on the IRS website. I'm trying to remember where I read that. No, it's not the fact sheet. Do you remember? Let's go to, yeah, quick reference guide. Go to the quick reference guide. right
Well, the quick
here.
reference guide shows you what, well, maybe this isn't the one I was thinking it was.
All right, so here it says the benefits and then how they can, I think I read it. It's probably on the IRS website, but yeah, you can pull up, you know what, it's the instructions for the 88, no, the instructions for the 5884, that's where I read it. Okay, go to the instructions for the 5884, Robert. So essentially, if you're a veteran, and depending on which one of those bullet points, that's the highest one of $24,000 threshold. So they address the veteran one, and we're gonna show, let's go to the instructions. Yep. All right. Because you can get up to 40% on $24,000. So if you keep going down, and it's going to list it out. Here it is right here. Okay. Current year credit. And so right here, you get $6,000 if they're a qualified veteran with SNAP. You get $12,000 if they're a qualified veteran, and they've got the, oh, what is that? Connected to disability. And then there's $14,000 level and a $24,000 level. So, so if you keep going down, the one that we're going to see, it says a little bit further down, and actually it's on this next page. Yes, right here. Stop. Go up a little, down a little bit. It's the very first sentence. It says, the $6,000. Basically, somewhere I read in here that the majority of them are going to be the $6,000. So the ones that are higher are going to be in the veteran section. And so what this means is that if they aren't in the veteran category, then essentially $6,000 is pretty much what we would get for as far as the limit. So take $6,000 times 40%.
Yeah, and I
Again,
think it
that's
says it
if
right
they're-
here.
There it is. And that's if they worked over 400 hours. So we're looking at a $2,400 credit per person for the majority of them, from what I can see. So I don't know what your thoughts are. Did that
No, that's
answer your
great.
question, Patrick?
That's great. So that answers the question exactly. So veterans can increase the 6,000 to a higher, but everybody's going to be that 40%. But it's possible you could go over the 6,000 threshold if you certain veterans qualify for more than that. Is that right?
That is correct. Now you only get the 40% if they work over 400 hours. If it's less than 400 hours, I don't know, let's say they quit or they get fired, whatever. But as long as they have 120 hours and less than 400 hours, then you get 25% of whatever wages they made. So if they made over 6,000, then you get 25% of 6,000.
Okay. So my next question is, so I hire somebody in July. I'm only going to be halfway through the year. How do I know if they're going to be at their 400 hours if I haven't finished that year? Do we know how to figure that and do that? And we can cut that out if we don't know the answer out of the video. But I didn't know how we know if
no, that's okay. Well, my understanding is that I'm going to look at it from a calendar year standpoint. So I'm going to look at my payroll for the whole calendar year. And so if they worked, you know, 400 hours, I hired them in July. And if they work 400 hours, which again, over 15 weeks is really just 26 hours a week, then essentially they would qualify. That's my thoughts. Anybody else? If anybody else sees that differently, but
yeah, I wasn't sure how to figure that out. If I hired them and they were working in November, and they worked in November for Emerald Advance or some other promote my business is offering, can I take that credit if I know they're going to hit over? And also I see on the actual form, the 5884, the C says qualified second year wages. Do you know anything about the second year wages at all?
so it talks about on the second, I did see that on the second year wages, and it's up to 50%, or it's 50%, but they have to be what's called a long-term family assistant recipient, or they need to be certified as a long-term family assistant recipient. And so I'm wanting to do more research on that. And again, we are really in the beginning stages ourselves. So that's why I have the caveat of definitely do your own research. And this is as we know it, but But yes, you can get 50% in year 2 if they are certified as a long-term family assistant recipient. I just don't know what the definition of that. I don't know what that means. So
That's awesome.
Yeah.
And so this is a, Robert, you said we're going to reduce wages by the amount that we receive in credit. But then at that point, I'm assuming it's a dollar for dollar tax credit at this point, not a reduction. So it's obviously going to be a credit that comes over on the K1. Is that where you said it goes, Christy?
Yeah, it goes on box 13 on your K1, I guess, depending on what entity you are. But if you're an S corp, it would be box 13. I think it's code J. Don't quote me on that, but yeah, it's a credit that's going to flow down to your personal return and go to the 3,800.
Wow, that's great. Man, and I know I've missed a lot of opportunities on this. I know there's been a lot of these that we could have done. So your idea is when you bring them on board before they start, they fill out that form, certifying where they are. If you look at the form, if somebody qualifies and you're going to go in and dig deeper, have them fill it out. Now, you have to submit the form to the state before their first day of work, or you have to have it completed before their first day of work?
We have 28 days from their first day of work. So if we do orientation, let's say we interview them in November and we decide they're a good candidate. Technically, you are supposed to have this form completed before you make a decision of hiring them. That's how the IRS rules read. Realistically, what we're doing is we've pretty much already done the interview, and the 8850 form comes out at orientation. So when they're at orientation, they fill out the 8850. And we ask every person to fill out the 8850, everyone. And then basically when we ask them to leave the date blank, because they may not start for another, in our case, they didn't start for another month. So you have 28 days from the date that they are that they start. So the IRS regs do say that you have 28 days to submit the form before from the day that they start, their first start date. So for us, that would be whatever's on Versa Clock. So 28 days from whatever's on Versa Clock. If we were ever audited, that would be our paper trail.
Well, Christy, I sure appreciate it. I don't know if anybody else has questions.
Yeah.
This is great.
So Christy, the one thing we're doing different is we're actually going to include that 8850 in our application process as opposed to new hire paperwork. I agree. It feels like it's a more natural fit with new hire paperwork, but just based on the very bottom of the 8850 right before the employee would sign it, it basically says that you attest that you're signing this before you have received a job offer.
Okay, that's a really good point. So I think we do need to change our process. That is a great point, Austin.
So I think that's the one thing that we're doing a little differently, but other than that, I think we're in alignment. I mean, you guys are obviously further along the process than we are. We're trying to play catch up with y'all, but that's where we're currently at.
Very nice. Good catch.
Well, and
Yeah.
because and just to kind of put some numbers to it, I mean, just in this first year, how much are we thinking maybe we might save or get a credit?
I think we have 6 employees that qualify. I mean, we don't have that many new hires. I think so.
Yeah, I think it was 5 or 6.
5 or 6,
So-
and I think we only hired, I don't know, maybe 15, less than 20 new hires, right, Rowena?
Yeah, right about 20, I would say.
Right about 20. Okay. So 25% of our clients, of our new hires. And so you take, would you say 5 or 6, multiply that times 6,000, and then multiply that times 40%. So what's the math there, Robert? Basically 2,400
5 times 6 is 30, times 4 is $12,000.
So $12,000.
Awesome. Thank
Which
you
is
guys
great
so
if you're
much.
hiring these people anyways.
Yeah. Right.
Well, lets you keep them, I'm thinking it lets me keep them longer. I can keep them on, I can have them work longer and keep them more engaged longer. If I know that I'm gonna get 40% back, I can keep them working more.
Yeah. Well, I've got one girl that, I mean, she can't work a lot of hours because she needs to stay home with her kids. So I'm having her do mystery calls from home. I'm having her do the thank yous through WFA. She's a CSP. So just trying to keep her busy. So it's nice to give those extra projects. So a lot of times I might be thinking, okay, yeah, they've got, you know, if I'm trying to decide between two different people that have the same skill set, I might be more, you know, lean more towards the person that you know, that qualifies for the work opportunity credit.
Yeah, I mean, this can give us a great way to help with, I know a lot of us have raised rates or, you know, there's raised costs, especially on our labor costs. And if this can be a great way to help, you know, mitigate some of that.
Yeah.
Awesome. That's great stuff. I really appreciate it. Or if you want to stop that recording, we can chat about a few more things and just kind of see where we are, but let's get that recording stopped and we'll get that going from there.
Great information. Thank y'all for sharing.
Yeah,
Thank you for
definitely
being
appreciate it, Robert and Christy.
All right. Thank you guys. If you come up, if you figure anything else out, feel free to share. Appreciate it.